Good day. This is Behl, and I want to welcome you to the first live stream that I'm ever doing. It certainly won't be the last. It's going to be the very first, and we're going to have a series of live streams going on in the future. We'll talk about personal finance, productivity, crypto, Celsius, well, whatever becomes of it. We'll talk about the short squeeze. We'll talk about several other things. And before we get started, some housekeeping stuff. So first of all, since this is my first time doing a live stream on video on YouTube at least, and I'm doing it all technically by myself while I'm still on the move. If I get disconnected or if the sound is not great, please forgive me and also let me know that that is the case. I'll try to do the best I can with the limited technology I have right now. Secondly, if you have any questions, feel free to leave them in the chat. I will get to the questions sooner or later. We don't have a lot of traffic, a lot of people watching, so I will get to the questions at some point of time. And basically, I'm hoping to address all your questions, especially about Celsius, Chapter 11, and Cell Short Squeeze. Now, the first thing to understand is that none of this is financial advice. It cannot possibly be. I cannot offer financial advice to anyone because I don't know your personal situation. This is not legal advice. I'm not a legal advisor. This is not medical advice at any rate. And actually, I can hear myself. I don't know how. Oh, I hear myself here. Yeah, gotta mute myself. So this is not advice of any professional capacity. These are just my opinions. I might share what I'm doing with my portfolio. And that's about it. You're free to take as much information as you want, but treat this as entertainment. Don't sue me because something I said did not go the way I said it would. The only thing I want to tell you is that bet sizing or risk management is the single greatest thing you can do about basically anything in investment or in life. If all your money is in real estate and real estate market crashes hard and you have a lot of mortgage, well, there is a situation you go into negative equity. What do you do then? Well, you wait it out. And by the way, that's what Celsius should have done. I've seen the papers and I've seen their holes, and those holes were really a small percentage of their AUM at a certain point of time. Now, here's why Celsius went into Chapter 11. So if you haven't watched my video from earlier this week, I posted it on Monday, I believe, where I talked about whether it's insolvent or illiquid. And I explained why equity can be negative even if Celsius did nothing wrong, which now we know they did a few things that were absolutely wrong. They should not have done that themselves. Here's the biggest mistake, two big mistakes they made. First of all, they stopped focusing on the Cell token. Celsius as a company started with Cell token. Cell token was used to bootstrap this company. We all know that. We all understand that. And when they stopped focusing on the Cell token, well, the demise was not very far away. I had these discussions with a lot of people, including Mark Mayer and some of my other friends who were invested in Celsius, especially Mark, because he told me about Celsius to begin with. And the idea was great. You buy some Cell token and you're participating in this company, which is going to take on the banks. And basically, the big difference between Celsius and the banks would be that Celsius would give you most of the revenues generated, while banks keep most of it for themselves. So the idea was really sound. And I'll explain to you in a bit going forward why I think it was sound. The idea was sound, and I'm using phrases in the past tense such as was. But basically, Celsius's idea was that they let institutional borrowers take the risk for us. So you and I and Celsius do not have to take that risk, right? How do you make yield in crypto? How do you make yield on Bitcoin? Well, there are two ways. Either you can start a mining rig. Believe me, I've done that. It's not very profitable. And the profitability of your equipment goes down over time. So by the way, if anybody is telling you that, oh, Celsius has this great big mining operation and that will be used in the future to pay off your debts, I think they don't understand how hash rate works. You know, hash rate over time goes up. That means it becomes more and more difficult to mine Bitcoin, get rewarded by Bitcoin. And something that was profitable in 2020 may not be profitable in 2022 or 2023, and definitely won't be in 2024 going forward, because the cost of electricity consumed to produce the same amount of Bitcoin goes down, essentially, goes up, essentially. So the return on your investment keeps going down. In fact, most of the proof of work miners make most of their money within the first 6 months, and that's it. So if the equipment is older than 6 months, there's not a lot of profit left there. That's what happens with Bitcoin mining. So if you have your hopes that, oh, Celsius's mining business will fill up the hole, that's not going to happen anyway. So the way you make money with Bitcoin is, of course, you can mine Bitcoin. So that's Bitcoin inflation. And secondly, you can go on and basically play arbitrage across exchanges. So what you'll notice is that there is a small price difference across the exchanges. Exchange A might have 21,000, exchange B might have 20,900, exchange C might have $21,100 as the price of Bitcoin, and an arbitrage player would buy on the cheaper exchange where the price is 19,900 and go sell it on the expensive exchange where the price is 21,100, making $200 per Bitcoin in the process. This is one of the ways yield is made. Secondly, and this is what institutional borrowers do, by the way, some of them are arbitrage players. Secondly, they are market makers, basically. If you want to buy Bitcoin, it's slightly higher than the spot price. But if you want to sell it, you can sell it at slightly less than the spot price. If Bitcoin is selling at exactly $20,000, you want to buy it, you can either wait or you can pay $20,200 right now, let's say. That's a 1% spread on the upside. And then same thing on the downside, 1% on the downside. So total 2% of spread, 19,800 versus 20,200, right? And that's liquidity provision business. And that's sort of liquidity provision. It's called market making. And liquidity provision is exactly the same, but that's done on DeFi. Let's not get into the technicals of that, but it's pretty much the same conceptually speaking, right? So there are people who have liquidity on both sides. They have USDC, and let's say they've got Bitcoin, and they're providing liquidity and getting paid a reward for providing liquidity. All those business models have inherent risks. The reason why Celsius was such a great idea was this risk was limited to their borrowers. Their borrowers would have to have that risk, not you, not me, not Celsius. Celsius would simply have collateral. They would be over collateralized, and the institutional borrower would go on and have that risk, and they would have most of the rewards as well. I mean, you can make 100% a month if you really know what you're doing and the markets don't move adversely against you. You can make 100% a month. I'm telling you because I already have. I've tried those businesses and in some cases made a lot of money. So I know what's possible. So it's not unusual to have someone pay 20% on Bitcoin or 10% on Bitcoin per annum when they can make 100% per month or 50% per month on the Bitcoin that they borrow. This is why Celsius was such a great idea. The problem is when you have $1 billion under assets, let's say $1 billion under assets, you can find a way to deploy 800 million of those $1 billion through institutional borrowers. But when you have $20 billion under assets, well, there aren't as many institutional borrowers who will come around and borrow $16 billion worth of cryptocurrency. So Celsius grew too fast, and too fast of a growth is always cancerous. I always keep saying that. In my last video, I talked about those mochi ice cream shops in Japan that have survived 1,000 years, right? And the idea is that they treat growth as cancerous. If there's a growth that is too fast, and I used to see all these weekly statistics from Celsius, it was almost like bragging. We got X $100 million in inflows this month or this week. And people are thinking that's the greatest thing since sliced bread. The problem is you have to deploy most of that to generate yield on that. If you're Celsius, you have to deploy most of the incoming inflows of cryptocurrency in order to generate yield. And the market is not that huge. I mean, you don't have that many institutional players dabbling in liquidity provision or trading, swing trading, or arbitrage, so on and so forth. There is no natural way of generating yield on cryptocurrencies, unless we are talking about Hex, which has a built-in inflation code, or Ethereum, which of course rewards miners pretty much like Bitcoin. So if you have to generate yield, if you're trying to generate yield, well, there's a problem. You got to take some risk. The great thing about Celsius's business model, once again, was that that risk was basically offloaded upon the shoulders of institutional borrowers, And that sadly did not happen when they scaled very quickly from 1 billion in AUM or assets under management to 20 billion in AUM. And they had to unfortunately go out and take some of that risk themselves, which does not mean they couldn't have covered it. What we had was an onslaught of FUD campaigns, of course, with some elements of truth to it, but there is always risk. I mean, if you think any investment is risk free, you're fooling yourself. So there was some risk with Celsius, of course. There was also some risk with, there's also some risk with gold, by the way. I mean, look at gold. Gold went down over the last 10 years, and then it's only starting to get back up, and it's down again. So there's always risk with something. There's always going to be risk with whatever you do, even real estate. I mean, real estate is not even a real asset that you can own. Try not paying taxes for a while. You're going to figure out who owns that real estate, really. Try digging a hole that is too deep. You're going to figure out who owns that piece of land. It's not you. You only have sort of a little bit more rights than a tenant. That's it. And in many cases, tenants' rights might supersede your rights as a landowner or a property owner, but that's besides the point. So there's always risk, and you got to diversify. The key to having a great portfolio is diversification. Problem is, Celsius could not possibly have deployed 80% or 85% or 75% of 20, 30, 40, 50, $100 billion in assets under management by offloading that risk to institutional borrowers. It was just not going to happen that rapidly. They grew too fast. That was one of the reasons why they had to take on all those risks, because where else can the yield come from? So that was one of the big reasons why they failed. Okay, let's look at some questions, and we'll keep talking about this. So the first question is, what's stopping Celsius or any big whale from buying a significant amount of sell from these exchanges and basically make the dominoes start falling? So we're talking about sell short squeeze here. Let's talk about sell short squeeze for a minute. I am participating in it. The reason why is because I have fraction of 1% of my portfolio in the sell token short squeeze. And the potential reward is basically me doubling my portfolio within a few weeks, maybe a couple of months, with just sell token short squeeze. So the risk is really small. And I've been telling everyone to keep your risk really, really small. If you've bet 10% of your entire portfolio on it, you're doing it wrong. Okay? The absolute maximum that you should possibly have, and this is not financial advice, this is just my opinion, treat it as entertainment, but the absolute maximum that you should have in sell token short squeeze is maybe 2.5% of your entire port. That's it. If your portfolio is $1,000 and you have more than $25 worth of sell token right now for the sell token short squeeze, you're doing it wrong. You're going to get wrecked again. I have been supporting the sell token short squeeze since day one. But I'm telling you right now, it's very risky. It's a high risk play, especially now that Celsius is out. Celsius is no longer likely to buy 1 million sell tokens a week. That was a big factor in the favor of sell token short squeeze. When we started, someone asked me, what are the odds that sell token goes to $100 and this short squeeze happens? And I said between 20 and 25%. Someone asked me yesterday, I said less than 10% now. So if you have more than 2 to 3% of your portfolio in this, you're YOLOing it, man. You're just going YOLO here. You're taking too much risk. I'm going to talk about risk and reward once I have another camera. I don't have a 2-camera setup right now, but I would show you that in the beginning, if you have a good investment, risk and reward increase proportionally, but then there's a maxima to the reward, and then reward really goes down while your risk continues to increase. And the optimum position here would be, let's say, 2% of your portfolio for the sell token short squeeze. I'm still participating. It's a major fraction of 1% of my portfolio. So let's say just 1%, just under 1% of my portfolio. And that's basically the only investment right now I have in cryptocurrencies. Rest of it is sitting in fiat because, hey, we are in a bear market. So what's stopping all these exchanges and Celsius? Well, Celsius just stopped buying, as we know, Chapter 11. So they need to have permission from the court to resume operations. So Celsius is not probably going to help us with the sell token short squeeze any longer. They were until last week. What's stopping another whale? Well, fear, you know. They know that Celsius is going through a bankruptcy. There's no other way of sugarcoating this. I mean, Chapter 11 is really bad. Without Chapter 11, Celsius might have made it out with a small haircut for the depositors, for the customers. I like to call you customers. I mean, I'm a customer of Celsius. I'm not a depositor. This is not a bank. We're not talking about a bank. We're a lender. We are an unsecured lender. You are an unsecured lender. Look at their terms of service. And I didn't have a channel back then, but if I had, and I were recommending Celsius, I would have told you that you're going to be an unsecured lender, so manage your risk, you know? Anyway, yeah, so whales are very concerned about their own portfolios, and some of them are still participating. I expect more of them to participate. They don't have to participate with a lot. They can participate with 0.1% of their portfolios. And technically, theoretically, it's possible for them to walk away with a 20% boost in their entire portfolio with 0.1% risk. It's a possibility. But at the end of the day, people make their own decisions, so that's that. Some of them are participating, some of them are back down, some new whales are coming in. I actually placed 2 orders on Thursday. I don't know if I should show you this. Maybe I'll post a screenshot on Twitter later on. But I basically, added to my position a little bit because it was like 0.5% and I wanted to bring it closer to 1%, still keeping it below 1%. Another question. So, could you explain how the shorts close their positions and the price only moves a few cents? Well, depends upon the size of the short, right? If a short seller only has 20,000 on the spot market shorted, and they want to buy 20,000, the price doesn't move much with 20,000 sell tokens. You know, that's like a $15,000 purchase right now. It doesn't move much. The price, the big candles that we've all been waiting for, happen when liquidations begin. Liquidation price points for a lot of short sellers are close to $2, $3, or $4, based on what I've seen. I could be wrong. It could be closer to $1. I don't know. But we've already been up to as high as $1.50, maybe a little bit beyond that. And we did not see a liquidations cascade basically take effect. So my guess is it's between $2 and $5. And until the price gets there, you're not going to see a series of liquidation cascades. Now, what can you do? Well, you can keep hodling on, you know? At the end of the day, supply and demand is on our side. By us, I mean the people who are participating in the sell token short squeeze. So math is on our side because shorts have to pay interest and the spot shorts have to pay interest in sell token. So they are continuously buying sell token. They're buying as much sell token almost as Celsius would have, which gives the biggest strength. This is the biggest reason why sell token short squeeze is still a possibility. The supply is really low, and the demand sooner or later has to be in a position where it supersedes supply. What can you do? Keep your position small, keep draining the exchanges, leave nothing on the exchanges, and list your sell token for sale for at least $100 on 1inch or matcha.xyz or one of the other DeFi exchanges while your sell token remains in your own wallet. That's very important. Okay, another question from Chris. Do you think the price targets for sell will be the same, about $100? To be very honest, I think if it works, it can go higher than $100. There's no guarantee that it'll work, but if it does, there's no reason why it can't go higher than $100. So I'm getting greedy. I have some of my orders set at $200 and beyond, but some of them set at $100 just to take profits if we get there and start taking profits at that point of time. Sell token short squeeze is in a stronger position right now, even though Celsius is in a much weaker position right now. Okay, what are some other potential hidden risks? Again, a question from Chris. So risks for the sell squeeze. Well, the biggest risk is that Celsius is no longer participating. And who knows what happens this week as the court hearings begin. So we could have a surprise from the court hearings. We could have people basically giving up because people are really demotivated. I keep telling people math and psychology are both equally powerful. And with Celsius entering bankruptcy proceedings, a lot of people have lost a lot of money and a lot of people have lost a lot of confidence and faith. So there's no reason why people can't just say, okay, I'm done with this, screw it, I don't want the money, I'm out. You know, that's another risk. So it's very important to educate people that you can possibly recover at least some of the money that you've lost. And by the way, even if you get half of your coins back, let's say 2 years down the line, 3 years down the line, it's going to be very different from having 100% of your coins right now because we are in the middle of a bear market. Right now, you should be making moves which basically put you in a prime position to profit during the next bull run. But if your funds are locked, they're locked. And we don't know how long it'll be. My guess is you're not going to get even half your coins back within the next 18 months, no matter whose plan you follow. This is why it's very confusing to me why people make gods out of people. I mean, you were hearing in Mashinsky we trust until Wednesday. And then Wednesday came around and chapter 11 was declared, and now it's in new gods we trust. You know, don't trust in people. Trust in your own risk management, in your ability to manage your own portfolio. That's the only thing you need to trust, and that's the only thing you need to focus on. You're trusting the wrong people all the time. I mean, every time you put so much trust in a person that they have the potential to wreck your entire portfolio, wreck your family, wreck your children's future, you're doing it wrong. So you know, that's something to keep in mind. Will Celsius's mining operations be the driving factor in a plan to make depositors whole? If so, could it work? No, because Bitcoin is going to get much harder to mine. We know that new ASICs are just around the corner. Nvidia is going to announce the 4000 series of graphic cards, which is more relevant to Ethereum, but it basically correlates to the entire market's hash rate or the entire blockchain's hash rate, entire series of blockchains hash rates, you know. So hash rate is going to increase, which means it's going to cost more and more energy, more and more electricity to mine each and every Bitcoin going forward. And to expect that just because the prices of Bitcoin will recover, that the hash rate will not proportionally or disproportionately grow with it is just hopium. And I've said it before, I'll say it again here live. I don't subscribe to hopium. I don't care where this hopium comes from. I don't subscribe to extreme emotional reactions, whether they're positive or negative. I don't care. I mean, it's all emotional. None of that is going to play out, you know. The only thing that is really bad, extremely bad, is when you have extreme amounts of your portfolio in one position. That's just extremely bad, whether it's crypto. By the way, if you have more than 50% of your entire money in crypto, you're doing it wrong. You should have at most 50% of your money in crypto. Maybe even that's too much. But I understand crypto grows so fast that even if you start with 10%, you might end up with basically close to 50% or more of your money in crypto. So that happens to me all the time. And I have to constantly rebalance, sell some of my crypto, put that money somewhere else outside of crypto. Okay, we've seen this one. Chris, another question. Thanks for your content, man. You're welcome. Keep it up. Got to challenge you on Bitcoin and proof of work, though. Proof of work is fine, but proof of stake is better. I mean, proof of work is just wasting electricity, wasting computer power, solving problems that don't need to be solved, you know? That's all there is to it. I mean, this is why Chia failed, by the way. Chia was such an impressive concept, but it failed because it was proof of space. It's like whoever has the largest plotting and then farming rig wins, you know, and it's just stupid. I mean, why do you want to waste hardware when you don't need to? Proof of stake is now proven to be just as good as proof of space or proof of work. And when you can stop wasting, you should stop wasting, right? That's the idea. I mean, there was a point of time when proof of stake was not proven. So I would have said, okay, proof of work is great. This is my problem with Bitcoin. It's proof of work. Even Ethereum is proof of work right now, and they are at least trying to switch to proof of stake. At some point of time, they'll get there, hopefully. But Bitcoin, it's so stupid and slow and boring, which does not mean I will not DCA into it, or I advise people not to DCA into it. I will get some Bitcoin when it's below $14,000. I'll start DCAing or dollar cost averaging. It's kind of stupid, but it's also the OG, and it will go up. It's not safe, but it will go up. So I'll have a huge portion of my crypto portfolio in Bitcoin, as always, during all bull markets. And then I'll try to sell as close to the top as I can when the next bear market begins. Okay. When will the whales on our side? This is the last question Chris says. Chris, you got a lot of questions. No problem, buddy. Will the whales on our side start one of those squeezes again? When? Yes, they're likely to. I don't know about when. When I have updates about that, I'll post a video or maybe post a tweet. We'll see about that. Okay. Yeah, good day to squeeze some lemons. Exactly. Keep your position small. Keep squeezing. How long do you believe it could take before the short squeeze makes a breakthrough? I would give it another month or so, maybe two. If it ever happens. There is a major chance that it won't happen, but if it happens, it might take another month or two. It's just a hunch, by the way. Patrick says hi. Hey, Patrick. Are the whales you previously mentioned still participating? Yes, most of them are. Some of them are out because they heard the news of Chapter 11 bankruptcy. That's not a great news, no matter what you're told by someone. It's not great news. So some of them are out. Some of them are still participating, and we have some more people who are now joining in to participate. So that's also good news. And Mac says hi. Hey, Mac. What about FTX pulling shenanigans like pausing trading if sell short squeeze pushes? Yeah, I mean, FTX will always pull shenanigans, you know. They can pause trading, they can halt trading, they can even delist the sell token. It's unlikely, but it's all possible. The reason why I have been telling everyone to remove your coins off of FTX is because of shenanigans like this. At the end of the day, the spot shorts have to close their position. So even if FTX does it a few times, they cannot stop people from getting liquidated because they gotta save their own hind. You know, FTX has to save its own hind. So when you are a lender of sell tokens, like some of our whales are, well, you're lending it essentially to FTX, and then FTX goes on and lends it to the spot borrowers, right, or the short sellers. So FTX is on the line. If you want your coins back, they gotta give it back to you. And if they can't collect from the short sellers, well, guess what? They go out on the open market. DeFi now, right? I mean, there's only so much coins left on OKX or, Wobi or other centralized exchanges. So they got to go out on DeFi. And guess what? Who's selling on DeFi? Well, you are. I am. And hopefully your price is not $10. Some people are still very optimistic about $10 and they're like, oh, if I can only make $10 on this. Well, guess what? If the price can go up to $10, it can just as easily go up to $100. So don't leave money on the table. You know, the only reason it might not is because sufficient numbers of people list sufficient sufficient sell token at $20 or $30 or $10 or $5. You know, that's the only reason why it might not go up to $100. Hey Laksh, thanks for your hard work. Kafai, I'm sorry if I'm butchering your name. My name is hard. I know it's hard to read names that come from other cultures and other countries. So Kafai, and let me know if I'm mispronouncing it. Kafai man says, thanks for your hard work. You're most welcome. And he says he says I'm in the short squeeze. Great. I have seen FTX's sell supply drop and then it goes back up. That's just whales, in many cases, just moving coins from their cold wallets back to FTX in order to lend them out. I wouldn't be too surprised about that. I know of a particular whale who's moving more than 1 million sell tokens in and out constantly, and he is the one responsible for those wicks you see sometimes. So the only thing that matters is the total supply. And there are at least 1 million, 1.5 million, maybe more sell tokens that our whales control. They move in and move out of FTX all the time. We are not going to see those big wicks until the cascading liquidations begin, which is a possibility. It's a low probability possibility, but it's definitely a possibility. And when that happens, if you have your sell tokens listed at $10, your orders are going to get filled first. But remember, there are plenty of people who have their orders listed at $100 or more, yours truly included, and you might be leaving money on the table. Because when those cascading liquidations happen, they might happen, but when they happen, FTX or the short sellers have no choice. They have to buy the sell at whatever price we offer it to them. Okay, another question from Philippe. He says, do you think Celsius can resume operations sooner if they get some money from a big player like Binance? It's definitely possible. They would have to get permissions from the courtroom. Those take a while. Courts take a while to understand everything. Lawyers take a lot of money and time to get anything moving. Believe me, lawyers are much slower than they lead you on to believe. Okay, if you've dealt with lawyers, you know this already, especially with things like this, where this is not a criminal offense. This is more like a civil offense, or this is just bankruptcy, reorganization, as they call it, Chapter 11 reorganization. Everyone is much slower than they're leading on people to believe. But it is definitely possible. A lot of factors need to be considered. It's possible. It's low probability, but it's possible. Okay, another question. Wouldn't sell keep on drying up from the exchanges? So wouldn't eventually sell short squeeze be a guarantee? Nothing is guaranteed. You might have $100 sale of your sell tokens. Until you pay taxes on it, withdraw the money and spend it somewhere else, it's still not guaranteed. I mean, who would have thought Luna would crash or Tether would have whatever has happened to it? Um, Nothing is guaranteed. Circle might crash, so your USDC might end up becoming worthless. Trust token might crash, so your true USD might or true GBP might become worth $0 or 1% of what they're worth today. Nothing is guaranteed, but it is likely that if nothing changes spectacularly, sell token short squeeze is only a matter of time. If nothing changes spectacularly, however, is a big presupposition. If you believe in the short squeeze, okay. So this person has a question. Will I be a snake if I have two accounts, one longing and one shorting sell? I wouldn't say that. You got to look out for your own portfolio. At the end of the day, some of us are doing it for a cause, but there are some of us who are supporting the sell short squeeze just from a financial motive, and I don't care. I don't care. As long as you're supporting it. In fact, someone just made, I don't know, $800,000 or something shorting sell token on the perp market. And I actually warned this person that if you know what's good for you, you're going to walk out now. This guy heard me and he walked out with an $800,000 profit. And all I have to say is congratulations. You saw the market, you took the risk. And when you're on the short side, your risk is infinite, but you took that risk, you managed it well enough, and you were able to walk away with a lot of money. It's fine. In my book, it's just fine. It's as valid a reason as our reason to wreck the shorts is. We are willing to, it's a war. It's a war. So if you say, okay, it's good for me or it's okay for me to go out and stab the other guy, well, it's just as valid a reason for the other guy to come out and stab you. We can argue semantics all day long. He started that or I started that or whatever. It does not matter. I don't care. What matters is how well you manage your portfolio. Remember, your first accountability is towards yourself, your own family. That's the biggest accountability you have. Then towards your investors, your customers, your community. But if you're not managing your risk well enough, you are basically failing at your job, at being responsible towards your own financial portfolio, towards your family, towards your family's financial future. Another comment is, if you believe in the short squeeze, remember that the risk of shorting has infinite loss. Sure, but like I said, someone just walked away with close to $1 million just shorting sell token. So I actually shorted some of the sell token, and I essentially shorted it by selling it, when I saw it was falling. You can call it, it was my own sell token, so I wasn't borrowing to sell, but I sold it off. I started selling when it was close to $5, and by the time it was $2, I'd sold most of it. The reason why is because, well, we're in a bear market. And if you tell me that there's a risk involved with this, well, yes. There's a risk involved with shorting, but that's true for everything. You were long on the sell token. Didn't you have the risk? You were long on Celsius. Didn't you experience the consequences of having taken that risk? Everyone takes risk. And yes, on the short side, the risk is infinite. On the long side, the risk is finite. The upside is infinite. True. But at the end of the day, there are people who make money with the shorts. And, there's nothing you can do about it. That's how markets work. That's how free markets work. Okay. So some more thoughts about sell token short squeeze and the crypto market. Well, right now, sell token short squeeze makes a lot more sense, and I'll tell you why. We are in a bear market, and we are not even at the bottom. So if the sell token short squeeze plays out, the 1% of your portfolio that you're betting on this might actually double your portfolio, and you can take just the winnings from the sell token short squeeze. It's all an if, right? It's all contingent upon an if. But you can see, if you take that winning, whatever you make out of the sell token short squeeze and buy Ethereum and Bitcoin, just that, with that money at as close to the bottom as you can, well, the next cycle is going to be yours. There's a good chance you make more money with this and the bet on Ethereum and Bitcoin during the next bull market than you ever had on Celsius And there's also a solid possibility that Celsius might not even release your funds by that time, and you would be back in business. There's a good chance. Is it guaranteed? No, 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 no. It's not financial advice. It's not guaranteed. There is no guarantee. In life, in crypto, in business, there are no guarantees. I'm going to take a sip. Ooh, the coffee is cold. Gotta get some water at some point of time. Anyway, Um, yeah, so let's talk about now. Actually, I had some more thoughts. So, before we move on from Celsius, unless someone else has any questions, I have to talk about chapter 11 a little bit longer. And I'll do a video. Actually, let me see if I can do that right now. Hang on. I can share my screen, I know that much. We'll hear from Alex Mashinsky what chapter 11 actually means. So let's see if I can do that. Give me a second here. All right.
Chapter 11. Chapter 11 is basically bankruptcy, where the company says we can no longer run our business. We cannot give the money back to the depositors. We cannot pay our liabilities, obligations. They're in their filings. They said that they have 50 to 100 million of assets, and they have between $300 and $500 million in liability. That's a very, very bad situation. So,
Okay. So you heard Mashinsky. It's a very, very bad situation. Thank you. It's a very, very bad situation. That's what chapter 11 is. The rules don't change suddenly just because the shoe is on the other foot. Chapter 11 is really bad. I've been saying this, and there are people who tried to convince you, who have been trying to convince you that this is the best thing that could have happened since sliced bread. No, it's not. It just means that now, instead of taking a haircut, small or large, and getting your funds back at least at some point of time when the market's turned, now you got to wait for the courts. And that might be years, and you're still going to take a haircut, but you are going to wait for years now. How is that good news for anybody? I mean, I fail to understand. Explain to me, please. That's not good news. You would have taken a haircut, maybe a small one, maybe a large one, depending upon how markets played out, depending upon how well Celsius played their bets out. But now you're going to take that haircut. Now the Celsius management is no longer responsible because, well, they are under court's protections. So any punishment that they can get is not based on reputation anymore. They've taken that hit. They don't have anything else on the line. The only thing they have on the line is basically whatever the court tells them is on the line. Which in this case, in case of white collar crimes, if I know anything about white collar crimes, it's nothing. Mashinsky is no longer responsible now. You have alleviated his responsibilities by, and by you, I don't mean you, the viewer. I mean, whoever did this, you have alleviated his responsibilities by getting him into chapter 11, getting Celsius into chapter 11. It's not a good situation. You're going to wait for your funds. If you ever see them, you're going to take a haircut. And it's probably going to take much longer than it would have taken if Mashinsky just decided to handle it internally. He would have had a lot of stuff on the line if he handled it internally, which is why I have been against Chapter 11 since day one. You hear the lawyers. There was a Twitter Spaces going on yesterday. There was a lawyer who said bankruptcy takes like 16 to 18 months on an average, and then rearrangement of funds or redistribution of funds takes years beyond that. This is a lawyer telling you it's going to take multiple years. And lawyers are overtly optimistic at the beginning, I'm telling you that. They'll tell you 6 months and it takes 6 years. I've got a court case since 2018 pending, and we haven't even been able to get to the interrogatories right now. There was COVID, oh, there was this, there was that, and one of our lawyers left, and somebody else, had to take off this and that, and you get 1,000 excuses. You don't get execution. If you find a lawyer who can execute for you in a timely manner, they're worth their fucking weight in gold. You don't find lawyers like that. You absolutely don't. All right, let's see some more comments, questions. Vikas is asking, going back to sell short squeeze, could you still target $100 more, less? For me, it's more. The probability that sell token short squeeze will eventually transpire is lower. But if it does, there's no reason why the sell token price cannot go to $200, $500, or even beyond. Personally, I'm going to take some profits at $100, more at 150, more at 200. I've got a cascading ladder. But yeah, if it works, the supply is completely locked out now. With Celsius not releasing the funds anymore, the supply is completely locked. So there's not going to be enough sell tokens for the shorts to be able to close their positions, and they will have to when the prices start cascading up. Exactly. One high man says that's good news because no more supply coming for shorters to cover up. Exactly. No new supply coming in from anywhere other than you and me. You and I could fuck it up. We could screw it up just as much as we made it happen. So chapter 11 wasn't great. And anybody that tells you, oh, this is just fine. In fact, you know who I'm talking about. I'm not going to name names, but new gods have been aiming for chapter 11 since day one. Here's something to think about. This guy is equity, but chapter 11 reveals that equity is negative. So his investors on the equity side are now all wiped out. This guy also has deposits on Celsius, which are now locked up for years, and he's going to take a haircut just like you and me. What was the reason why he wanted Chapter 11 to begin with? He wanted it. He was campaigning for it. Why? Go on, try to explain it to me in the comments below. Tell me why you think he wanted Chapter 11. I have theories. Doesn't make them guarantees. I have theories. The theory is that he wanted control and he was looking for customers. Here's a possible solution. I haven't seen his plans, but here's a possible solution. He's going to give you equity in his firm. So he's got new customers automatically without having to win their trust. Well, he did win your trust. At least enough of the Celsius customers' trust. So he's going to get customers of his own. And he's going to get control. My problem with this is, and this is my hunch, but here's my prediction about Celsius. Celsius is over. The business model as we knew it is over. The bear market exposed it, killed it. It's over. It's finished. You're done. The dream that you have for passive income, done. Whatever comes out of this whole mess is going to be just another version of TradFi. It's going to be TradFi on blockchain. That's it. The entity that wanted to share their revenues and their profits with their customers, gone, finished. That dream is dead. Anybody telling you anything else is selling you a pipe dream. And I would love to be proven wrong, except I can't. You can't prove me wrong right now, other than with your hypotheticals. You're wrong if you're telling me, oh, this can happen. Oh, it's just as baseless as, oh, mining will take care of us. Mining is going to get less and less profitable unless those ASICs, those hardware equipment are upgraded, which nobody will. Who's got the money? It's in the hole right now. Who's got the money to upgrade those graphic cards, those ASICs, those miners? I've heard news about, this might be rumor, this might be true. I don't see why this cannot be true. I've heard news about Chinese entities wanting to take over the mining operations because, hey, where are most of those mining equipment, ASICs, manufactured? Take a guess. Wild guess. All the way in China. That's where. So if you think mining is going to make you whole, if you think that there is a beautiful outcome at the end of this Chapter 11 bankruptcy with a new management team in position or a new rebranding of Celsius, you're missing the point entirely. Celsius was risky enough to begin with, even when you had people who had their heart at least in the right position. And believe me, Mashinsky had his heart in the right position at least to begin with, but they were all way over their head. They didn't know what they were doing. And they saw so much money coming in, they had to generate yield. So they went out and played with it on their own because there was no institutional borrower who would take that much money off their hands while still being over collateralized. And this is what we get. What do we get when we have TradFi coming in with the control that they want? They don't want you, the average person, to have the money. They don't want it. They cannot have it. They cannot let you have the passive income. They say slavery is finished. It's in the past. I disagree. There's no way slavery is over. We are all economic slaves. The bullwhip doesn't have to be made of leather. It can be made just as much of a contract and a bank account. You're being whipped when you wake up every morning, even when you're not feeling well, even when you're feeling sick, you go to work, to a job that you don't even like that much, where you're underpaid and treated not so well. When you do that, you're being an economic slave. And you think they're just going to let you go? The powers that be have had this power for millennia. Here comes this little company and that says, I'm going to share the profits with you. Except they made their own mistakes. We should have expected that. I fully expected to take a haircut on my Celsius deposits at any point of time, my Celsius money at any point of time. Because this is a new idea. It's a revolutionary idea. You think there's going to be no backlash? You saw consolidated backlash. And now that Chapter 11 has been filed, we've lost the team that had the motive. We've lost the team. And I'm not just talking about Mashinsky. I'm talking about the key employees who came in because they believed in this idea. I joined because I believed in this idea, not because I wanted the, 5% yield. I mean, who gives a crap? I have a lot of ways of making passive income. I did not need the 5% yield or the 2% yield or whatever. And I was permanently platinum. I did not need that yield. I believed in this idea. This is what we get. Anybody telling you that there is a silver lining to this cloud? Well, there is one. It's the sell token short squeeze now that the sell is completely locked up. Other than that, none. Will you get your money back? Maybe. Will you be made whole? Forget about it. Anytime soon, you're dreaming. You're dreaming. This is the worst thing that could have happened. I continue to believe, and time will tell if I'm right or wrong, but this is the worst thing that could have happened. All right, some more comments. So Adam has a question. I don't have a clue how to handle my locked funds for taxes now as they are classed as a disposal. Talk to your tax advisor. It would be different for different jurisdictions. There's no one-size-fits-all answer here. So there might be a different jurisdiction in one state or country and another way of handling this in another country. You would have to talk to your advisor. And don't just talk to your CPA, who's probably incompetent. Talk to a tax attorney. Pay the $200, $400 that you need to in order to talk to them. Then bring that information over to your CPA. That would be my recommendation or suggestion. That's what I would do. That's what I am going to do. Yep. You're right. One high man says, TradFi killed Celsius. Yes. Yes. Celsius team, if you thought they were never going to make mistakes, you were wrong. If you thought in Mashinsky we trust is going to save us, is not going to save you. They were going to make mistakes, but their idea was great. Here's the problem with echo chambers, okay? People participate in these echo chambers. You've got a hex echo chamber, you've got a cell echo chamber. And something funny to know, I am blocked by Celsius Network Twitter account. I'm blocked by Celsius Network's Twitter account because I tried to raise the discuss the possibility that not everything is hunky-dory, and this was 6, 7, 8 months ago now. Echo chambers, man, they're just stupid. You just listen to all these people that you trust, you believe they are your own community, and then you don't want to go against them. I get it. I totally get the idea of belonging in a community and not jeopardizing your position, your standing within that community. I don't give a crap. Like I said, my first fiscal responsibility is towards me, my family, my own financial future. If I'm not surviving, I can't even tell other people what to do. I can't take care of other people. I've got investors of my own. My second fiscal responsibility is towards my investors, towards my businesses, towards my customers. I gotta take care of them. And if I'm not brutally honest with myself, if I decide to participate in these echo chambers, I'm toast. People wouldn't trust me with the kind of money that they trust me if I were just to participate in echo chambers just like everyone else. Echo chambers are bad whether they're negative or positive. Depending upon points of view, the same chamber can be very negative to one person and very positive to another person. Don't participate in those. People are often wrong about almost everything. And so I got blocked by Celsius for bringing up the idea that Celsius can possibly make mistakes and we should be prepared for that. Guess where we are now? Philippe says, I will learn from this. Yes, that's the best thing you can do. You can learn from this. Remember, you're going to have more and more opportunities in the future, not less. We are heading into a world of financial volatility. There's going to be so much volatility. You're going to be craving stability. But volatility is great if you know how to risk manage. And I'm going to talk about risk management on this channel for the rest of the duration of this channel, as long as I decide to continue to do this. Risk management will be the core theme of whatever I tell you about finance. Personal finance, business finance, everything is about risk management. Everything else is secondary. Your profit motives are secondary. How profitable something can be is secondary. How profitable this sell token short squeeze can be is secondary. What's primary? Risk management. You got more than 2.5% of your portfolio, 2% of your portfolio in sell token short squeeze, you're doing it wrong. You're risking your future, your family's future, your financial future if you have more than 2% in it. Hey, if it goes to $100, I walk away with $1 million. Sure. If it goes to zero, remember, right now, sell token has no inherent value anymore. The inherent value of sell token came from the boost in rewards. When there are no rewards, you're not getting 30% extra on zero. What's 30% of zero? It's zero. You're getting $0 extra because of owning sell token. So the utility, the core utility of sell token has been evaporated, eviscerated. Again, thank you, chapter 11. That was not the case last week. Even though withdrawals were halted, Celsius was still paying out rewards. Do you think they're going to pay out rewards this Monday? By the way, I don't think they would, but if you have any evidence that they would, let me know. I'd like to be corrected on this. And I'm not absolutely 100% sure. All right. So what are the other projects that I'm participating in? I'm going to talk about them more in the future. It's the Hex ecosystem. Risk managed, extremely risk managed, totally prepared for it to go down to zero or do 100x, 1000x, whatever. I'm always risk managed. I'm also into freeway token. Again, extremely small portions of my portfolio. But right now, I'm mostly into USDC and True USD and some PAX Gold, PAXG. Why? It's the bear market and we are not close to the bottom yet. I'll start dollar cost averaging into the projects I like when we get closer to the bottom. Might take 2 to 4 months from now. 4 months, let's say, 3 to 4 months from now, I'll start dollar cost averaging. But for now, I like to keep my money in fiat because, hey, US dollar is just thrashing everything else this year, isn't it? Maybe not used cars. I bought a used car for some money a couple of years ago and then sold it for more money this year than I bought it for after driving it for well over a year. So used cars and US dollars is where it's at. Euro got thrashed, Indian rupee got thrashed, every other currency in the world got thrashed, not US dollar. And US dollar is still devaluing itself as much as it has always done, maybe more so. So that tells you that right now we are at the cusp of an explosion. And I'm looking forward to it because that explosion is what's going to make me intensely wealthy, I hope, because I'm going to buy the bottom or close to the bottom. I sold Bitcoin very close to the top, but not like 50,000 or 60,000. I sold it close to 40,000, which in retrospect was still a good decision. I saw the markets moving. I was just too lazy because I had to move some money out of Celsius. I had to go to my bank locker and find my Ledger wallet, so on and so forth. And that laziness cost me, let's say, at least $10,000 per Bitcoin. So in the future, lesson learned: keep your wallets close and easily accessible. I was just hoping that there would be a slight recovery and I would sell, but that never came. And we kept plummeting from 42 down to 38, down to 36, 33, 31, 29, 25, and then down to 20, 18. And any recovery you see right now is just a wick. It's not permanent recovery. You're going to see more damage, more bloodbath in the crypto market. So one Hyman says that Bitcoin may pump a lot due to short squeeze. Similarly, sell as well. No, sell is very small. The market cap is very small. Bitcoin is going to be largely uncorrelated to the sell token short squeeze. If there's a pump, it's going to be very small, very temporary, and then it's going to go back down. Bitcoin is going down for now. Ethereum is going down for now. I have my buy order set at below 14,000, and hopefully I'm not wrong. If I am, this is not financial advice. So you got to manage your own portfolio and manage your own risk. But I think it's going to go down to maybe 10, 11,000. And I'm going to start dollar cost averaging below $14,000. Okay, let's look at some of the other things. Actually, let me show you the sell token short squeeze stats right now. Let me switch back to my screen. Okay, you should be seeing my screen now. So this was recently updated. Total supply is 6.27 million, of which at least 2 million belongs to the whales on our side. So I would say 4.5 million, just to be conservative. Supply on FTX is 2.8 million, of which, like I said, 2 million can be drained out whenever the whales on our side decide to push it. So less than 1 million on FTX. And total shorts on FTX are 18 million, but spot shorts are where it's at. So it's 4.7 million. So right now the advantage is still with longs, but it's not that great, to be very honest with you. Okay, even with our whales, with removing their supply, there's going to be at least 4 to 4.5 million sell tokens left across the exchanges, and spot shorts are just 4.72 million as of the most recent update on sellsqueeze.com, which I designed the website, my team designed the website, but we're not maintaining the numbers on this, like I said before. So the advantage is with us, but it's not that great. Having said that, it doesn't have to be, especially if we can get at least a couple of other whales to join and drain out another million or so sell token, then the advantage would be drastically on our side. The perp market doesn't matter as much because it's all settled in USDC. It's a derivative of the spot market, okay? The perpetuities market is a derivative of the spot market, which means that the perp market participants, shorts or longs, are safe as long as the spot market does not move. It's the spot market that we need to focus on. So these numbers right here, total shorts on FTX and total supply across exchanges are what you need to focus on. Total shorts, spot shorts, I'm sorry, not total shorts, spot shorts on FTX, and then the total supply across exchanges. We should have other columns on this, by the way, other fields on this, talking about spot shorts on other exchanges. I think OKX has a lot of shorts. So I'll talk about getting this updated maybe this weekend, maybe later on. With that said, yeah, let's go back to actually the camera. So if you have any questions, go ahead and post them now. Otherwise, we can move on and talk about some other things related to risk management, which is my favorite topic to talk about altogether. All right. Do you think CFI is dead now? No. With the TradFi backing CFI now, which is where we're headed, CFI is going to be stronger than ever before. It's just not going to be the same. And by that, I mean qualitatively. So it's not going to be same in terms of the ideas behind CFI as they were during the last bull run, where companies or CFI corporations were sharing most of their revenues and profits with us, the customers. We're going to have a lot more of traditional banking models taking over the CFI space now, which means CFI is going to see a huge boost, which is in a way good for us because as more and more people come into the crypto ecosphere or ecosystem, the prices of crypto assets are going to skyrocket. So if you are into crypto assets at the end of this bear market, you're going to do well for yourself. The only thing you're not going to do great for yourself in is CFI, because CFI is not going to be the same. You were getting 5, 6, 7% on your Bitcoin in the beginning. It was dropped to 1% or even less than 1% towards the end. And I suspect that the interest rates will never be the same. And for a sophisticated investor, C5 may not make a whole lot of sense now going forward. But we'll see. We'll see. I mean, I still have some money on crypto.com. So we'll see how that plays out. I actually got to risk manage that. Everything goes down during a bear market. So the CRO token, I think, went from 50 cents or maybe even 90 cents, I'm not sure, down to 12 cents. And that's not that's nothing to write home about. And yeah, I mean, at the end of the day, this is where we are. This is the update I have about Cell tokens. And if there are no other questions, I suppose, we can call it a day. Let me quickly look at Twitter if there's anything else to discuss, because there was a lot of stuff to discuss on. Okay, so here's something I have to discuss with you. In Mashinsky we trust has now been replaced with in new gods we trust, okay? And I saw this comment just now, half an hour ago. Someone says, Otis, you're living in a delusion. There's this guy, New Gods, who is giving us an out. If you really look at the balance sheet, it just isn't there otherwise. This is heading to liquidation and years of mess if his plan or one like it doesn't succeed. What plan, dude? What plan are you even talking about? I'm willing to bet money here. I'm going to bet you a whole Ethereum right now, if you can take that bet, that none of the Celsius customers are going to see their money back in 18 months from today. Anybody wants to take that bet, I'm all in. Free money for me. Nobody sees any money back within 18 months from today. Chapter 11 is slow. It's painful. It's going to get dragged on for years. And then when you see your money back, it's going to have a serious haircut. Whose plan are you basically relying on now? Does it even matter? Like, does the courtroom care where that new plan comes from? No. On an average, Chapter 11 filings take 16 to 18 months, and then years after that for redistribution of funds. Mount Gox has still not been, settled. 8 years later. You're living in a dream world if you think this plan or that plan or this guy's got a new plan and in new gods we trust. You just replaced Mashinsky with new gods. You got to be realistic. Stop participating in echo chambers. How many times can I tell you? I'm going to keep on saying that. You got to stop participating in echo chambers where, we got a new god now. The old gods are going to save us. It doesn't matter, man. Nobody has a solution where you get your money back or a significant portion of your money back, let's say 75% of your money back within a reasonable time frame, let's say 6 months from today. Nobody. There is no plan like that. You may get some equity. I mean, worthless, right? And you think that might have worth, good for you, man. At the end of the day, we all go to bed with the delusions that we all have. I'm not saying I'm free of delusions. I'm trying to avoid as many delusions as I can. So I listen to people and then evaluate it based on first principles. And I'm telling you right now, I cannot see a possible way in which you can be made whole in any reasonable amount of time. Now that Chapter 11 is here, it doesn't matter whose plan you support. You can go on and support a cow's plan for all I care. It's not going to make a difference. And I keep saying only buy what you can afford to lose. That is always true. If you have too much money in the Cell token short squeeze, too bad. If you're sitting it out, too bad again. Because you have the chance to recover at least a small portion of your portfolio, if not all of it, with just the Cell token short squeeze, as long as you manage your risk well. That's really important. And again, with respect to Cell token short squeeze, it's definitely possible. The probability is low, but the potential reward is much higher now. There are other thoughts about this plan or that plan. I don't want to talk about those. And the reason for that is the plans are meaningless now. There is no plan that can fill a $2 billion hole. I mean, some people promised, New Gods promised, I've got $6 billion lined up. Well, bring them on now. I'll support anyone who can make you whole, who can make all the customers of Celsius whole, or even with a haircut within a reasonable time frame. Let's say 6 months. That's pretty reasonable, isn't it? I'll support whoever does that. Until I see a guarantee like that or a statement like that, I am supporting nobody's plan. That's my stance on it. I'm not going to support a plan and then look like an idiot or feel like an idiot and feel devastated again or feel betrayed again because I supported one guy or another guy or whatever. It's not hard to predict when markets take a tumble, your assets lose value, especially in crypto where markets can fall by 80, 90%. So illiquidity and technical insolvency is always going to be a key defining factor of CFI because CFI cannot just print money like TradFi. TradFi can print money ad infinitum. CFI cannot do that. CFI will not have the ability to do that because, hey, it's on blockchain. How can you print money unless you have code that says explicitly, here's how you print money in such a such situation, which I don't think is inevitable, but we'll talk about it when we get there. For now, nobody has a plan, and I trust nobody's plan because, yeah, it's a whole, and there is nobody who's so benevolent who's going to say, oh, these users are hurting. Maybe I should participate and give them $2 billion, $2 billion, $2 billion with a B dollars, and be benevolent so that they can walk away without a damage. Nope. If you think people are that benevolent, I have a few bridges in Manhattan. That's all I'm saying. um, I got a few bridges that I can sell to you. In the end, what you can do is you're going to grieve. And I understand that. If I had a significant portion of my portfolio on Celsius and we were right now, where we are right now, I would have grieved this. There's no way to put it. There's no silver lining. There's no sweet talking out of this. I would have grieved it. But I would have accepted the situation and moved on. It was, following a chapter 11, this is just inevitable. You might see some of your funds back. It's going to be a serious haircut, and it's going to take months and months and months, if not several years or even a decade. So I wouldn't rely on that money. If you need to grieve, you need to grieve. At the end of the day, you need to understand it's just money. If you play your cards right, you need 2 big wins, one in sequence to the next, and you're fine. You're going to be back in business, even if you lost everything. A couple of years ago, actually back in 2018, I was talking to someone who asked me, how long do you think it takes to get wealthy from being an average wage earner who is basically living from hand to mouth and has no savings or investments to speak of? And I said, if you start focusing now, between 7 and 15 years is all it takes. So even if you are 55 years old, 60 years old, you still have at least a decade where you can actually really focus, learn a lot of risk management, and come back out stronger than you had ever believed before. That's a definite possibility. And it all depends upon you. It doesn't depend upon this guy's plan or that guy's plan or his salvaging of whatever the mess is, right? There's no salvaging here. You are the only person to salvage. Your family is the only entity to salvage for you. Your portfolio is the only portfolio that matters. So if it's much smaller today, that's okay. If it's down to 0 today, that's okay. I can tell you right now, I had negative equity several times in my life. 6 figures, mid to high 6 figures, negative equity. I'm fine. Money is just money. It just comes and goes. As long as you have your health, as long as you keep your sanity, as long as you take your lessons, markets are just going to have cycles. All you have to do is participate on those cycles, in those cycles, keep your eyes open, think rationally, and you'll be fine. Might take a few years, you'll be fine. That's all I have for right now. Thank you so much for participating. We have some more comments. Let's see. Someone says, sheesh, this guy's a real downer. Well, you can get your copium wherever you want. I'm not stopping you. I can't stop you. Go get your copium wherever you want. Tim says, I'm okay with a 50% haircut. You know what? I would be, except it's the time frames. 50% haircut now or in the next 6 months, great outcome. Great. 50% haircut 10 years from now, 8 years from now, not such a great outcome. So we'll see how that plays out. All I'm saying is you got to plan for the worst case scenario, and if something better happens, awesome. Why not? Anthony is here. Hey, Anthony, how are you? Been talking about chapter 11 and my thoughts about those, and some people seem to think I'm a real downer. I actually received several direct messages on Twitter saying, you're too doom and gloom. And I said, I don't do copium, man. I don't do copium. I just do reality. You want copium? Plenty of peddlers out there. You don't need to follow me. I'm such a small channel. I'm such a like a private guy. I didn't even have a Twitter profile to speak of a month ago or a YouTube channel to speak of a month ago. I don't peddle copium. I don't do it. There are people who are talking about pulse chain and 10,000x. So if you have $100, you become a millionaire. I don't do copium. I do realistic numbers. I do probabilities. And if it still goes 10,000x, you know what? I'm not going to be complaining about it. I just want to prepare for the worst case outcome. In the worst case outcome, in case of cell token, in case of hex, in case of pulse chain, in case of pulse x, pulse doge, whatever, cult, Luna, Terra, everything has a worst case scenario where it goes down to zero. Binance has a worst case scenario, it goes down to zero. Ethereum and Bitcoin have a worst case scenario where they go down to zero. How long has Bitcoin been around? 14 years, 13 years, that's it? You think that's proof of survivability? 12 years in a history of hundreds of thousands, millions of years. Money's been around for tens of thousands of years. Bitcoin has been around 12 years. Oh, big deal. If you're not prepared for Bitcoin going down to zero, you're not playing the real game, man. And you're going to be crying because you had so much in Bitcoin or so much in Ethereum and you got blindsided when that EMP attack happened. If history has shown us anything, it's that anything that can happen will happen eventually. Everything that has a beginning has an end. I don't do hopium. I do planning. I do strategy. You want hopium? Plenty of peddlers out there. Yeah, Anthony, you put 100,000 in that. Yeah, you know what? Something is always going to happen, right? Something can always happen. Can USDC crash? Yes. Circle can go under. Can True USD crash? Yes. Trust token can go under. Anything can go down. Yeah, Tom, yes, you're right. You could take a 50%. Next bull run, you would have the chance to succeed. Absolutely. My concern is, and I'm not sure about this, but my concern is you would not get your money back even with a 50% haircut in time to be able to participate in the next bull run. That's the sad likelihood. It's a likelihood. It's not a guarantee. I mean, hey, who knows? Celsius reopens their withdrawals tomorrow and you get to get 100% of your coins out just tomorrow. I mean, that's a possibility, no matter how unlikely it is. But like I said, I like to believe in, I try to think about possibilities and probabilities. And the most probable outcome is that you're going to take a serious haircut and it's going to take years. That's the most probable outcome. I cannot sugarcoat this. I'm sorry. I can tell you that if you plan well, the next cycle and the following cycle can be absolutely yours. That's what I can tell you. So as long as nobody has any other questions, I think I've shared my thoughts on Chapter 11. Again, the worst thing they could have done, because now nobody has any accountability. It's all up to the courts, and nobody is really liable to take any steps to make you whole. People have hot air, really. This plan or that plan, it's all hot air, and I would love to be proven wrong. I would love to be proven wrong. Come back, download this video, come back in 6 months and show me, hey, Laksh, you were absolutely wrong. New Gods had this great plan and we have been made whole, or we had to take a small haircut and we got our money back. I promise you right now, I will post that on my YouTube channel and I will publicly apologize. I don't see it happening. I just don't. And copium is not my style. So I hope you have learned enough not to trust in echo chambers anymore. With that said, yeah, that's it from me for today. This was a good live stream, I think. We had a lot of people participating. So thank you so much for participating at an odd hour with me on the very first live stream that we did. I hope you enjoyed it, at least learned something out of it, or at least had enough of a perspective, have learned enough of a perspective to understand that this is not over. This is far from over. And you are not over. You're far from over. You're fine. You're going to make it. Even if you lose everything in this cycle, you can come back stronger. Remember, pretty much everyone who's super successful that I know at one point of time had negative equity. Sometimes in 6 figures, even 7 figures or 8 figures. Every successful person I know has had negative equity, myself included. And that doesn't change the fact that if you have the right mindset, if you have the right ability to manage your risk, you can come out of it unscathed. Thanks for participating. I wish everybody the best. If you have more questions, go ahead and post them on my Twitter channel or in the comments below, and we'll talk about them in the next video. Everybody, have a great day. I have nothing but the utmost respect for people who can maintain their optimism as long as it doesn't go into the territory of hopium and eternal optimism, even in the reality is suggesting otherwise. You got to be optimistic, but you got to be realistic, and you got to manage your bets. That's it. Keep participating in the sell token short squeeze. Hopefully, we'll recover some of our portfolio there. I'll see you in the next one.